awesome.
Stanley Black Decker, the world's largest tool company, ringing the opening bell here at the New York Stock Exchange this morning as American manufacturers continue to try and gauge the impact of tariffs and trade on their business. For more, we are joined now in a CNBC exclusive by Stanley Black Decker's president and CEO, Jim Loree, here celebrating the 175th anniversary of the company. Welcome.
Thank you. 175 years. It's so exciting. It's really impactful when you think about 175 years. The 32nd oldest company in the New York Stock Exchange.
Yeah, I mean, that's quite a history you've got. And, you know, sort of speaks to some of the changes we've seen in American manufacturing and the current trade debate. So how's that impacting you?
Well, the trade debate is one that, you know, we look at it and we say, on one hand, the goals are excellent. On the other hand, the way of getting there, you know, is volatile, okay? It creates volatility, creates uncertainty. And we don't know from day to day, you know, whether there's going to be tariffs, whether there's going to be a trade war, et cetera. So we have to be agile. I think that's the most important thing, is agility.
Well, we've already seen the tariffs on steel and aluminum. Does that affect your component costs?
Well, that would have been about a $50 million operating margin impact for us, but for the exemption. So the exemptions take that down to a de minimis amount.
What about the threatened tariffs with China? I mean, given the global nature of the supply chain right now, how could that impact you? Have you done any research in terms of quantifying it?
We have a strategy to make where we sell, okay? So we've been moving towards making sure that we manufacture where we sell for several years now. Strategically, you could tell 3 or 4 years ago that there was this nationalistic trend, not just in America, but around the world. And so, you know, strategically, we've been moving in that direction. You know, we're up to about 40% of made in America for the tools that actually sell in America.
So it's not like you would see massive disruption?
We would not see massive disruption. I think it would be more, you know, marginal at the edges of what we do.
And how much do you export?
We don't export much at all from the United States. We import, you know, much more than we export.
Right. Well, your tape measure says made in the USA with global materials. So you are still at least at risk to a certain extent from
we're
commodity
sourcing components
prices.
For sure.
Yeah.
In fact, commodity price inflation this year will cost us $180 million of operating margin. And we will offset that with $120 million of price increases. So that's what I was saying about being agile. We have to understand that arbitrage and manage that arbitrage every day. You know, a couple years ago, we got, the last 4 years, we got hit with $550 million of operating margin issues from foreign exchange. Okay, so if it's not one thing, it's another, and that's part of, you know, how we manage the business. And we had earnings growth all through that time period.
Any reason to think the pricing power increases to where you can make that margin back?
Absolutely. You know, we don't recover 100% of the inflation or the tariff impact or whatever, but we have about 3 to 4% productivity in our plant system that we get every year, and we're getting more and more of that through Industry 4.0 and automation as we implement that. So we just have to, like I said, you know, it's agility, managing it. You offset some of that with productivity, and you still get margin accretion.
Capital spending also seems to be on the rise, perhaps in part because, of course, it's encouraged under the current tax reform bill. Has that been the case for you? Are you ramping up your capital spending?
Absolutely. We've gone from running about 2.5% of revenues to about 3.5%. But a lot of that is actually related to capacity expansion. We've had a tremendous growth spurt the last few years. And so we're actually expanding capacity in 13 American plants right now. We're building 2 new American plants as we speak. So a lot of our capital spending is actually related to our growth.
Got the Home Depot numbers out this morning. Some disappointment on that sales figure as it relates to the weather and the late arrival of the spring season, though bears might look at it and say maybe the housing market has peaked out here. What do you see?
I feel like the bears are totally missing that one. We don't see any issue with respect to the underlying market in housing, in DIY. We had our own weather problems in the first quarter with our outdoor products, and you know the street took a whack at us. We were down 7% that day.
Yeah, your stock's down about 15% for the year.
Yeah, we were up 48% last year, so you know you're going to have a little take a little bit of froth out of it, but. There definitely is a sense that, you know, there may be some slowing in the consumer. There may be some slowing in construction. There may be some slowing in auto. You know, you folks are very familiar with that, and so are we. But what I'm telling you is, number one, it's not happening to the extent that the market is telling us. Number two, more than 50 or about 50% of our sales are overseas, and the markets are solid over there for the most part. So the emerging markets are pretty solid. Europe is, hanging in there and still has growth. So there's a lot of positives around the world, and I don't want to get too hung up on. There are some questions about rising interest rates, energy costs, inching up, and so forth. So yeah, that's all real.
You brought in the tape measures, which now have the Craftsman name. And we talk about, in consumer products, we talk about brand fragmentation all the time, how that hurts toothpaste and dog food, but brands like this, not so much?
Craftsman
Why?
is an incredible brand. It's an American brand, iconic American brand. So many people have Craftsman in their garages, in their homes. So many auto mechanics have it. So many construction folks have it. It's a brand that we are revitalizing. It was sort of trapped in its retail environment in Sears for many years. We've liberated it. It's going to be implemented in Lowe's. We've started bringing the products in. You're going to see a big push in that second half with respect to that. And 2019, we're going to paint the store red, for Lowe's, and it's going to be a really great initiative. And it's just a great feeling to be able to take this brand that has been neglected for a while, re-Americanize it, and bring it home and make it a big splash here in the United States.
I do love a good tape measure. Jim, thank you. Jim Loree.